Good afternoon. My name is Eric Levinson, Head of Business Development with Vena Capital, and we're here with Fung Nguyen. Fung is the Portfolio Manager of VAF, which is our Cayman vehicle, which has done extremely well. In fact, it was one of the top performing funds in Vietnam in 2021. And so we're here today to do what I'll call kind of a look back and a look forward. We're going to spend a bit of time on how the portfolio did in 2021, and importantly, look at 2022, what will be different, what will be the same, and how we think we can continue to really generate fantastic returns for our shareholders. So with that, Fung, thank you for joining me. Just give us a quick recap of 2021. How did the portfolio do?
In 2021, the Vietnam stock market did a remarkable job with return of 37.3%. And with that, the fund even did better with the return of 55.4%. That is net of performance fee return for 2021. So that brought the returns in inception to 92% versus 67% of the VN index. And it was an annualized return of over 26% for the last 3 years, compared to 19.5% for the VN index.
All right. And in terms of strategy, so you've been able to outperform consistently, which is terrific. Has the fund maintained the same overall strategy, over the last 3 years?
Yes, the fund has maintained its strategy to focus on both the stocks with foreign ownership limit and as well as the small and mid-cap stocks. And these both stocks groups contributed positively to the fund's return in 2021. So within the FOL stocks, FPT, the technology company, and MBB, the bank, these are our top holdings since inception till now. These stocks returned nearly 90% and 75% respectively in the year. Within the small and mid-cap space, the two holdings in the industrial park sectors, namely KBC and SSC, doubled in price. And these industrial park sectors is one of our top selected investment teams for the last year.
Thank you. So now as we think about 2022, I think one of the questions that people always want to understand is, how will this year be different? So here we are, it's March 1st. The first 2 months have been a little bit bumpy with kind of more factors outside of Vietnam. What do you think the year will be like in 2022? Will it be more of the same? You mentioned your top holdings were up 90%, 100%, so maybe not that much. How do you think this year will be different and why?
So talking about the performance of the fund, we think that the applications of our investment process through the stock selection and risk management contributed a lot to the strong returns in 2021 and also in the earlier years. And I think we think that it will continue to support our performance in 2022 despite some changes in the market condition. So recall in 2021, although the GDP growth of Vietnam was just 2.6%, and that was lower than the global GDP growth of 5.5%. But the Vietnamese stock market was among the best performing markets. So the strong local investors' participation was one of the supportive factors. So new account openings recorded 3 times higher than the previous year, and that accounted for 90% of the total trade value of the stock market. So with that, the average daily trading value already surpassed that level of the Indonesia and Singapore markets already. So in that context, small and mid-cap stocks actually outperformed the large-cap stocks because those stocks were the favorites of the local investors. But going to this year, we think that Vietnam stock markets will continue to benefit even stronger recovery of the economy this year. We estimated and forecasted a GDP growth at 7%, higher than the only 4% of the global economy. And also, we expect high corporate earnings growth at 25%, and that make the valuation of the market reasonable at 14 times. With that, however, we don't expect the flow from the local investor as strong as last year, but rather it would be more stable. And we also expect some more volatility, mainly from the impact of the external factors, not the internal one, that might affect the investor sentiment somehow. So we recognize that the market condition would be trickier than last year, and that calls for meticulous stock selection in order for us to achieve alpha, as we have seen in the first 2 months of the year.
Yeah. And it's interesting, and I appreciate that. So one of the things that Fung mentioned is we've seen significant growth in investor participation in the local market, and so significant account opening, but it's still only about 3.5% of penetration. And so while we don't forecast that same growth rate, there's certainly another new group of investors that we can have in 2022. So as you look at how performance was generated, and we talk about different themes from the market, is 2022 a continuation of the same themes, or are there new themes emerging, and maybe highlight 1 or 2 themes?
Yeah, so the FDI and export teams remain our top selection, as this is a long-term investment team for Vietnam. So the inherent supported factors for this team, including competitive labor costs, also the improving in productivity through the enhanced training and education, coupled with the stability in currency and politics of Vietnam. These factors make Vietnam an attractive destination to locate the foreign production facilities. So, even in the last 2 years during the COVID context, Vietnam still did a very amazing job in maintaining the high FDI inflows and even a higher export growth. So for 2022 and later, in later years, we still believe this team will still a good team.
Yeah.
Yep.
So, folks, a quick question. So, when I think of FDI, and Michael Coquelin, our chief economist, just wrote about it, we talk about Samsung, which is the largest, FDI investor. We've written about Lego, which just announced a $1 billion carbon neutral facility. Is FDI investable in the public markets, and how do you take advantage of that?
Yeah, so the portfolio currently has an exposure of around 15% directly to these industrial park players. So as mentioned earlier, we have KBC and SZC. We were able to accumulate them at very good price in the last 1 or 2 years. And then recently, we started to accumulate more names in the sector. We have DPR, we have NTC. Both companies had large land bank that were willing to be on lease in the next 2 years. So these companies also contributed to high earning growth for the portfolio in 2022.
Excellent. So I think it's important when we talk about FDI, the headlines are big companies, often foreign companies, but the reality is, being in Vietnam, there's small cap names or mid cap names that you can invest in the offshore funds.
Yeah. And beside the industrial parks for the theme, we also have some exposure in logistic companies and also the service that are providing and that can grow with the growth of the FDI companies. So that include the name in logistics like GMD, Gemadep. This one owns the large deep sea port in the south of Vietnam, and also BWE, the water supply company in the central of manufacture hub of Vietnam.
Excellent. And so as we talk about that, I know one other theme that people have talked about is kind of as we get kind of from a zero COVID to a living with COVID approach, is a rebound in domestic consumption. Is that something that you are looking at as well?
Yes, definitely. That is a new theme that emerged in 2022. We focus on the companies and sectors that benefit from the recovery of domestic consumption. So you know, Vietnam, from a very low vaccination rate country, now we have one of the highest vaccination rate, and for that we see that it is a lower chance of disruption in all the economic activities this year. So that will help the domestic consumption gradually recover from the very low base last year.
Okay, excellent. And then what about infrastructure spending?
So infrastructure spending also another good theme, and not for that theme only, it also supports the FDI and export theme in middle and the long run, because you know infrastructure is one of the bottleneck and one of the weaknesses of Vietnam, and now the government has never been more aggressive than this year. So they have a long list of project pipelines ready for 2022 and the years forward. So this year, together with a larger and more direct social economic support package worth around 5% of the GDP, we think that the infrastructure development and disbursement, the actual disbursement will be higher in the next 2 years. So therefore, we will have some increased exposure in the construction material and also the residential housing companies also.
Excellent. Yeah, and so one of the things we've seen is that there was, understandably, with the lockdowns and COVID last year, some of the larger infrastructure projects kind of slowed down or took a pause,
yeah.
And we expect there to be a lot of kind of, quote, catch-up in 2022. You know, so here we are, and as you think about the portfolio, you mentioned the adherence to a GARP kind of growth at a reasonable price approach. Is there anything that you need to do differently to manage the portfolio or to manage risk differently in 2022, particularly after, you know, 60 or 55% performance? You know, you have to definitely, you know, reassess the valuations, not just the price.
Yes. So we will remain selective and disciplined, and will keep loyalty to the GARP that you just mentioned. So while the portfolio invests in both FOL and small mid-cap stocks groups, the exposure to each of these groups will change versus last year or throughout the year, depending on the assessment of both valuation and growth. So in 2021, we constructed a portfolio with increased weight in small mid-caps holdings, because at that time the valuation of these stocks were very attractive, and somehow a discount at 30% to the large cap universe. So in 2021, also we see that the broad market's valuation remain attractive at 14 times PE. The valuation of many of the small cap stocks has become less reasonable than the last year after the strong rally. So some of those even approaching the large caps level. So we believe that there will be more dispersion in the performance of these small cap stocks universe. So for that, we have to continuously reassess the portfolio and to balance the risk and return. So we will only include the stocks that satisfy our investment criteria. So currently, VAF's portfolio is traded at 2022 PE of 10 times, and the earnings growth estimated at 40%, ROE of 20%. So you see the valuations of the portfolio is very attractive compared to the broad index valuation of 14 times. That was actually a 40% discount in valuation.
And I think you said earlier consensus earnings is around 25%,
yeah.
and earnings of your portfolio is 40. So
yes.
it doesn't always work like this, where you get lower PE and higher earnings growth. So this happens to be one of those, again, unique situations. So let me fast forward, ask you another question. So is this market, we're going to, you know, is this market good for your investment style? So we just talked about, you know, dispersion. We talked about maybe higher valuations. Is this market good for a GARP approach?
I think definitely it would be even more, even better in 2021 when the performance of many stocks surged. But in 2022, we think with the dispersion in valuation among stocks, right stock selection would be more an attributing factors. So we will keep our rigorous bottom-up research-driven process to enable to select the winning stock in such market condition.
So is this a market where last year the market was up 37, you delivered an unbelievable outperformance? Are you thinking about maybe 2022 stock market performance will still be positive, maybe less robust, but so kind of active manager or manager skill will be even more important?
Yeah, definitely.
All right.
Yeah.
Well, thank you very much for your time. I hope that you've appreciated this. If you have any questions about the VAF portfolio, please let us know. And again, thank you for your continued support.